If I had to build a stock portfolio from scratch, what would I buy and how would I structure my portfolio? That will be discussed in this podcast, as we realized a lot of people are starting their portfolios now and starting to invest in the stock market. And it is a great time now. It is always a great time. It's never too early and never too late. No matter what the time is at the given situation, we are now in an uncertain situation. Nobody knows what the future holds, but in every situation, there are companies with good value and growth opportunities ahead. And over the long run, if you invest in quality companies that you understand and with good potential and prospect, you will make money. You must just look at the right places and do the right research. And invest in the future. That's the stock market will go up and down in the short term. It's very volatile, so that is why you should always stand on the fundamentals, the reason why you bought the shares in the first place, and stick with those fundamentals and never make emotional decisions. That is very important. You must almost, when you buy a share, you must almost be fine with it to never ever sell that share. So really understand the companies you invest in. So, getting into what I personally would buy, I'm Higgo. I'm the founder and CEO of FinMeUp, and I'll be covering this topic as it is a very important topic. So, I personally believe the growth opportunities still look much better offshore, especially in the United States and even in China. Especially with the fourth industrial revolution movement, as there are many resources in those countries, and they have the capital, and they have all the right fundamentals to succeed in this movement in the fourth industrial revolution, and in specific industries like the artificial intelligence, robotics, the technology, self-driving, and all of that. And that is why my largest investment, if I had to start the stock portfolio now, would be the Signia iTrix 4th Industrial Revolution ETF. The reason for that is this is an ETF that tracks various international companies, especially in the US, with much potential to succeed in their various fields in this movement to the fourth industrial revolution. So companies in that ETF includes Tesla, Nvidia, Raytheon. So there's so many companies with good prospects in this movement into the future, and it's very well diversified, which makes it safer, and it gives you a very it gives you international exposure, which is great, and looks for the opportunities there. So that would be my largest holding, and so I'm going to break it down in 100%, the total portfolio. So I would put 13% in the Signia iTrix 4th Industrial Revolution ETF. If you forget about what I'm saying in the podcast and you don't want to listen to it again, you can look at the summaries where we'll put everything in writing. So that would be my largest holding. Secondly and thirdly, they go together, but that's Naspers and Prosus. I would put 8% in Naspers, 7% in Prosus. So Naspers is basically a holding company. They have companies like Takealot, Media24, Prosus, which owns companies like Tencent and various other fintech plays. We'll cover that in much more detail on an individual podcast. It's also in the summaries, not in the summaries, in the stock picks, as Naspers was one of our recent stock picks where we gave some reasons and what they do and all of that, so you can go check out the stock picks for Naspers. Then fourthly, I would buy Bitcorp, which is also, I'd buy 7% of them in my portfolio. Fifthly, I'll buy Adcock Ingram, also 7%. They are a pharmaceutical company, and they have various products that treat flu-like symptoms and colds, which might also benefit from the coronavirus, as one of their products are the Panados, which is a painkiller that helps a lot with various pains, if you can call it that. And it's a very well-known brand. They are quite at a very, very, very good level to buy now. They have a parent company, Bitvest, which is a very well-run and managed business. So that would be Adcock Ingram. In the 6th, I would buy Purple Group, also 7%. So this is my small cap fintech play. And like Warren Buffett says, if a business does well, the stock price will eventually follow. So they are still a very, very small company. The share price is about 34 cents a share. And they own platforms like GT247.com, Easy Equities, Empress Asset Managers. But Easy Equities is growing at a phenomenal rate. So many people are, including myself, are shifting all of their savings to Easy Equities platform, as they are the cheapest fee rate in South Africa to buy shares on, and you can also buy international shares on them. You can they have the best tax-free savings account for the past 5 years, and if you look at their financials, they've shown the first profit now, which means from here on it's only upwards, as their the revenue is growing, their customer base is growing, and all of that. So this is a good company. It provides value, and where there's value, there's opportunity, and the price will eventually follow. So it is still a small company. It's still a bit risky, but I'm very happy to invest in them. Then I would buy Ceres Real Estate. So it's in the name, it's a real estate company. Also 7% of my portfolio would go into them. They're operating in Germany, and a large portion of their revenue is coming from storage, and storage is a growing market. And from all the real estate companies, Ceres is my favorite, so it gives you a bit of diversification in the real estate industry. Then in the 8th share, I would buy Transaction Capital, 6%. So in short, they are a monopoly in the South African taxi industry. We'll also cover more on that. And as we can't just quickly say what they do, why we buy, because Warren Buffett also says you must understand the companies you invest in. So these are just a rundown of what we invest in. The in-depth research on these companies will come over the next following weeks, even months, as we want you to understand the companies and not just go on to what we say, as we only provide our research and our opinions and thoughts, and you can use that and incorporate it in your research. Anyway, moving on. In the ninth share I would buy is Afrimat, also 6% of my portfolio. And in the 10th, I would buy African Rainbow Capital, which is 6% as well of my portfolio. They're also a holding company, and it gives you diversification in various industries. So they have Rain, which is the new up-and-coming 5G and Wi-Fi, whatever you want to call it, play, growing at an exponential rate in South Africa, and they'll probably move into Africa and so on. They also have Time Bank, which is the new bank with very, very low fees, and the new innovative bank. And they have other investments like Sanlam and so many other companies. We'll also go into more research or in-depth with them on a podcast in the next few weeks. In the 11th place, ShopRite, 6%. So that is our retailer choice. It gives good... Well, we believe you should have a retailer in your portfolio, especially now, because they are so low, and especially they've been beaten down in South Africa because the economy struggles so much. So they are our food retailer choice. You know probably the shops Checkers and OK, and so they have so many good companies that will survive any situation. They'll survive the coronavirus. They'll still be there in 6 years. They'll still be there in 10 years. So it's a good long-term investment, especially at these prices, if you are a patient investor. Also 6% of my portfolio. In the 12th place, Master Drilling, 6%. And they are, in short, a mining technology and innovation solution company. So they are operating across the globe, South America, name a country and they'll almost be there. They are also still small in market cap, but they are expanding and landing good contracts, and we'll also cover them. In the 13th place, Ultron, also 6%. They are an IT company with various solutions in healthcare and safety and all of that. In the 14th place, 14th and 15th So in a total, it's going to be 15. So the 14th, which is the second smallest share, but I think it is good to have some of it in your portfolio, and that is cryptocurrencies. So there is an ETF, if you can call it that, called DCX10. It's available on Easy Equities. I don't really know on which platforms it is available, but on Easy Equities it's available. If you need a link to sign up for Easy Equities, you can send us a mail and we'll send that to you. But this DCX10 is basically the 10 largest cryptocurrencies in the world by market cap. So nobody knows if Bitcoin will be the next, or it is currently the biggest cryptocurrency, but maybe Ethereum or another cryptocurrency might become the biggest. As I personally believe, this digitalized or decentralized currency is the way forward, and a lot of people in countries, especially like Germany, are using cryptos already, so there is a lot of opportunity for them. It's not the safest investment, as it's still nobody really understands it 100%, or nobody knows the future. That is why I'd buy the ETF with the 10 largest cryptocurrencies, which gives you a better diversification, and then you still have skin in the game in the cryptocurrency industry. And then lastly, I would buy the new gold ETF. That would be 3%. The DCX would be 5%. The gold ETF would be 3%, just to get some diversification into gold as well. So all in all, these 15 companies or 15 investments, you can buy all of them on the JSE. These companies give you a well-diversified portfolio with different sectors and locations. They have operations and revenue coming from the UK, China, Australia, South Africa, South America, Germany, and the list goes on. And with various industries, which also helps you with the retailer, the IT, the crypto, the gold, the pharmaceutical, the fintech, the holding company, the international exposure. So all of that gives you a very well diversified portfolio. So that is why I would buy those in my personal portfolio if I had to start from scratch. You also get your hands on the cryptos. You also get your hands on small caps like the Purple Group. So before you jump in and just buy the shares or buy any share, you must make sure that you understand the companies you invest in. Do your own detailed research, and FinMeUp will be covering most of these companies over the next coming weeks to help the FinMeUppers, the users, understand the companies better and help you with doing research and building investing confidence, as that is the purpose of FinMeUp, to help you reaching your financial goals, success and freedom and independence. And so that is why we'll cover these companies. We'll cover more companies, what they do, where they operate, their financials, their prospects, and all of that. And like Warren Buffett says, risk comes from not knowing what you are doing. So we are glad you're with us on this journey. And a rundown is just: firstly, Signia Itrix Fourth Industrial Revolution 13%. Secondly, Naspers 8%. Third, Process 7%. Bitcorp 7%. Adcock Ingram 7%. Purple Group 7%. Ceres Real Estate 7%. Transaction Capital 6%. Afrimat 6%. African Rainbow Capital 6%. Shoprite 6%. Master Drilling 6%. Ultron, also known as Allied Electronics, 6%. The DCX 10, 5%. And last but not least, well, actually the least, but that's a new gold ETF, 3%. We'll also be starting a portfolio from scratch on the NASDAQ, so that's the American companies, very soon. Look out for that podcast and summary. You can also, so like I said, if you're unsure how to start Easy Equities account where you can invest and trade in shares with the cheapest rates, you can just send us an email. We'll send you a sign-up link or just guide you in the process. As you can also buy NASDAQ American shares on Easy Equities, which not a lot of South African platforms offer. So yes, send us that. look for the stock picks, look for the podcast on that, and much more coming.